it sounds similar to poker, right? You're basically
Yeah.
reading your opponent, right? And that's one way to play poker. I mean, you could play poker strictly with the math.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So I've been thinking about this idea because you'll hear this a lot from traders, and to be honest, some marketers, people who are like marketing and trading in the trading area, like in the trading space, they'll say things like he cracked the code or that sort of thing. And there's like these legends in trading like WD Gann and people like that who apparently have cracked the code. Well, my question is there structure to the markets? Because you'll find a lot of academics who will say that there isn't, that it's a random walk down Wall Street or whatever. Like they say it's just random. It's the same as cockroaches walking up and down the wall. It's the same as a trading chart. But my question is there structure? Is there pattern? Is there a pattern? Is there something underlying the movement of the markets?
Yeah, that's a tricky one, I guess. I
It's
guess
very tricky.
yeah. So the place I think to start would be the perceiver, right? Like the perceiver effect. Number one, does your intuition or your training or your background tell you that there isn't a pattern or there is a pattern? So there's always that effect of, okay, how much am I bringing to the party? What is my mindset thinking about when I'm coming into this? And if your natural tendency is to go with some of the mainstream narrative, then you're going to say, oh yeah, the market's just a random walk. But if you dig deeper and you actually look at some statistics, I mean, their patterns do appear, right? I mean, that's the
Right.
reason why traders are successful. So I think that there are patterns there. It's just a matter of you finding them and making sure that they make sense to you, and then you can trade that. Otherwise, it's not going to be helpful, even if you do find a pattern, because if you don't jive with it or you don't think that it's a real pattern, then you're not going to be able to make money with it. So I think it's really like that double slit effect, right? If you're looking at light going through those slits, in one case it's going to turn out as a wave, the other case it's going to turn out as a particle, depending on who's looking at the experiment, right? Or how the experiment's conducted. So I think it's a similar thing. I think if you think that there's no patterns, you're going to find that. If you think there are patterns, you're going to find that. And it just depends on the
Yeah.
individual. What do you think?
Yeah. Yeah, no, I think that's true. The reason I've been thinking about it as I've been reading the book, there's a sort of a I guess it's sort of a biography of Jim Simons, who's the Renaissance technologies guy, and he's a mathematician. And so I like these books. Like I read a book called The Predictors. I don't know where it is. I thought I could pull it up, but there's a book called The Predictors about a bunch of physicists who ended up starting a hedge fund and all the stuff that they went through. They were like in New Mexico, so they had a delay. They were doing like high frequency trading, and they had this long delay to the market. So they they figured out that yeah, it might not be a good idea if if you're trading Chicago or New York that you should have your computers in New Mexico. You know what I mean? Like
Yeah.
they figured out like rookie things like that they figured out. But they were really interesting because they came at it from a sort of like a science point of view. And so Jim Simons is the same, right? And so it's really interesting because they have a really good track record, like 80% a year for like 25 years or something like that. Really
Wow.
good track record. Right? Yeah. And all these people, and it's a big secret. Like if you work there, you have these non-disclosures and all of you sign your life away and you can't talk about what they do and all this stuff, right? But it's interesting because he's exactly what you were saying before. You were saying like it depends on your perspective, basically. And so his perspective was that he had cracked a couple of tough problems in mathematics as a pretty young guy, right? And I think he went to Harvard and stuff like that. Anyway, the point is, and he ended up working for the government, like the code crackers,
Mm.
so they're like, he's an old guy. He's like 80 something, right? And so he worked on cracking the Russians' code and all this stuff, right? So he's had these sorts of problems that he came up with, and finally he decided that he wanted to crack the markets, right? And so as far as I can tell, now it's really hard to get from these types of books the technical information, and obviously they're guarding that quite well at Renaissance.
Hmm.
But it looks like essentially what he does or what they do is they've decided that the market has different types of moods, right?
Mhm.
And so like half the battle is figuring out what type of mood the market is in, and then kind of the patterns that are going to emerge from that.
Mm.
And I found that really fascinating because that's one of my, not that I'm using anything close to what they're using because it's much more basic and more blunt, but that's my, I like that idea of using, is it a volatile uptrend, a high volatile uptrend, a low volatile uptrend, a volatile downtrend, or a low volatility downtrend, or is it a sideways market, high volatility, or low volatility sideways? And that's a very basic way to look at the type of market that you're in.
Mhm.
However, it's extremely useful. You know what I mean? And it sounds like it's useful for them too to use something along that. I suspect that they're in a much more sophisticated approach, like with their formulas and all that. And I do know that they're using, or they were using at least, what they call AI today, but like expert systems and neural networks and stuff like that. So, they need a lot of data. They're just feeding tons of data. Those sorts of things just eat data. That's all it takes. But I just find that fascinating that was the approach, was that, well, look, we need, it's not that the markets necessarily have a pattern. They do, but you really need to know where the market is, what's the mood of the market, and then you can, you know what I mean, you can find the patterns. And that's so true. If you think about like trend trading, if you can identify that you're in a trend or potentially in a trend, then you're looking for pullbacks, right? And if you can identify the market's really going nowhere and it's just range bound, well, then you can find reversals, right? Like this is like basic stuff, but I just find it really interesting that was, he essentially came to the same conclusion as a mathematician trying to crack the problem of the markets. And I just thought it was interesting because, you hear a lot about this. You hear a lot about, oh, well, they cracked the code. And the implication is that there's only one way to do it, right? The only way to trade correctly is to follow, Jim Simon's formula, or to follow this robot, or to do this system that, I'm going to sell to you for $9.99 or whatever. It's not necessarily true. So you could see an example of where a certain trading system would work really, really well if the market was in this mood. But as soon as it's in another mood, as we know, trend following systems fall apart as soon as the market stops trending, and so forth, right? It's just really interesting stuff, I thought.
Yeah, no, it is. And it's it sounds similar to poker, right? You're reading basically reading your opponent, right? And that's one way to play poker. I mean, you could play poker strictly with the math, and that might work, but I think the best poker players know how to read people. So this is in effect reading a person, right?
Yeah, and he used to clean house. Like this guy Jim Simons used to play poker with his mates when they were like in graduate school or whatever, and he used to clean up because they would all come over to his house. In fact, there was a funny story in the book where they would all come to his house and his wife would make, food for everyone, and they'd just stay all night into the morning playing poker, and he would usually end up the winner. But there was one time when everyone came over on Friday night or whenever it was, and he wasn't there, and everyone asked his wife, said, "Where is he?" And they're like, "Oh," she goes, "He's in jail." I'm like, "Why is he in jail?" I said, "Because he never pays his parking tickets. He just ignores them." And finally they caught up to him, and then they chucked him in jail because he had all these outstanding fines around Harvard or whatever. And so all of his friends who had come to play poker, they took their money and they pitched in to go bail him out. It's a pretty funny story, but yeah. Yeah, but it's exactly what you're saying, right? Like it's definitely part of that, because there's the element of like in poker, there's an element of human and what, reading them, where are they at, what are they doing, what are their emotions, and also trying not to let yours out, right? They wear the sunglasses and all that, and then then there's the math, like okay, what are my odds here, right? And and then are they lying, are they bluffing, what is going on here? So it's very interesting that a lot of really good poker players are good traders too. There's plenty of books on that for people who are interested in that. But anyway, I just thought I would mention that, and we can put the link underneath this episode for anyone who wants to read it. I think it's called The Man Who, I can't remember, The Man Who Cracked the Markets or something, something like that. The Man Who, something like that. But it's just a biography, and it's really interesting. It reads like a novel. So yeah.
Okay, cool. I'll check it out. Thanks, Walter.
See you.
Bye.
Bye.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.